A warm welcome. You're watching Business at 9 with me, Jude Sunnit. It's been an action-packed day in New Delhi, even as those protests by first the Cockroach Janata Party and then the Congress has assumed mammoth proportions, bringing the national capital to a standstill. More on that in just a bit. But let's start with the RBI. The central banker has released a draft to simplify India's foreign investment framework by proposing rationalized foreign exchange management non-debt instrument rules. The draft aims to align regulations with the government's FDI policy, adopt a principle-based approach to accommodate evolving business models, and update norms for overseas listing of Indian companies. The central bank has also invited public comments on the draft till the 31st of August. We have Akansha with more on this.
That's right. The RBI has begun a major review of India's foreign investment rules with the aim of making the framework simple and more investor-friendly. Well, the current rules are governed by the Foreign Exchange Management Rules, or the NDI rules, which regulate foreign investment into India through equity shares, convertible securities and other non-debt instruments. In the last union budget, the government announced a comprehensive review of these rules. Now, following that announcement, the central government constituted a committee to review the existing NDI rules. Based on the committee's recommendations and consultations with stakeholders, the RBI has now released the draft Foreign Exchange Management Rules 2026 for public consultation. Now, the draft rules focus on simplifying the regulatory structure, aligning FEMA procedures more clearly with the FDI policy, reducing compliance burden, and creating a more future-ready framework for foreign investment. Now, this is significant because the existing NDI rules were framed in 2019 and business models and investment structures have evolved considerably since then. The RBI has invited comments and suggestions from stakeholders and the deadline for feedback is 31st August 2026. So while this is not an immediate policy change, it marks the beginning of a major overhaul of India's foreign investment rulebook.
Well, Akansha there with a roundup of those draft rules. But moving on to news from the regulator next, SEBI has operationalized its recent amendments to the buyback regulations by directing depositories to put in place the required framework by the 1st of August. Under the revised rules, promoters' shares will remain frozen from the board or shareholder approval of a buyback until the offer closes. However, promoters will still be allowed to tender these frozen shares in the buyback, while encumbrances created before the buyback can also be invoked. We have Anurag Joshi with more details on this.
Markets regulator Securities and Exchange Board of India has asked depositories to put in place an operational framework on a new amendment to the buyback rule. Depositories will issue guidelines to facilitate the amendment on the buyback. The amendment was brought by SEBI on July 1. The framework and the system enhancements on the buyback are to be put in place by August 1 by the depositories, SEBI said in the circular. The circular is effective immediately. The amendment on the buyback requires shares of promoters to remain frozen from the passing of the board resolution on buyback or the special resolution until the closing of the offer. Such shares will remain frozen at the ISIN level, SEBI said, and the SEBI rules, however, will allow tendering of shares in buyback on the frozen promoter shares, and the rules will also allow invoking of encumbrances before the buyback on such shares, the circular said.
Moving on, in a written reply in the Rajya Sabha, MOS for Finance Pankaj Chaudhary said that high-frequency indicators for the first quarter of FY27 point to sustained economic momentum backed by resilient domestic demand. The government added that the economy has consistently grown above the 7% figure over the last 3 years, supported by healthy corporate balance sheets and prudent fiscal management. In fact, we have Prakash with us for more details.
Well, the government has informed Parliament that high-frequency indicators for the first quarter of the current fiscal year indicate sustained economic activities. In fact, it also reflects domestic demand, indicating the continued resilience of the Indian economy. MOS Finance Minister Pankaj Chaudhary has informed the Upper House that the macroeconomic fundamentals of the Indian economy remain strong. Real GDP has consistently grown at over 7% during the last 3 years. In fact, he also adds that economic growth continues to be supported by robust domestic demand, healthy corporate balance sheets, and of course, prudent fiscal management. In fact, the government has informed Parliament that despite global headwinds and geopolitical uncertainties, Indian economy is performing well, has shown remarkable resilience so far, and in fact, all key economic indicators have shown positive signals so far, despite geopolitical uncertainties.
Meanwhile, moving on, let's take a look at how the markets fared today. The Nifty closed below the 24,200 mark, even as broader markets, on the other hand, surged in trade. PSU banks and IT stocks came under significant pressure, while realty, metals and autos posted gains. Infosys and HDFC Bank were the top losers in the Nifty today. And staying with more market-relevant news, Bajaj Auto reported their Q1 numbers, even as revenue is mostly in line with street expectations. EVs hit 30% of the domestic mix, with revenues nearly doubling year-on-year, despite capacity constraints. Avi is here to tell us more on these earnings.
So Bajaj Auto has come out with a very strong set of numbers as the revenue is in line, but there is a big beat on the EBITDA margins, which is at around 20.9% as to what the street was estimating at 20.1%. And it is a 10 bips increase on a quarterly basis despite the commodity cost pressure that the company is facing. This can be attributed to the forex gains that the company has since it has forex exposure in the export markets. Their EBITDA came in at 3595 crores and adjusted PAT at 2983 crores, which is up by 10% on a sequential basis. So a very strong set of numbers from Bajaj Auto despite the commodity headwind, and this can be seen as a very big positive for the stock. EVs now make 30% of the domestic business, and the revenue is already double on a yearly basis for the EV segment. It is important to note that the Chetak demand, which is the Chetak EV demand, is now outpacing the supply that the company has, and the company is already undertaking capacity expansion to scale this up and for exports as well of Chetak EV. The E3-wheeler business is now two-thirds the size of the ICE three-wheeler business, and the KTM and Triumph domestic revenue is up by around 60%. In the range of 125cc to 160cc, the company is now ramping up models to reinforce their leadership in the sports segment. Exports have also surprised the street, and it has crossed 700k units for the first time in the quarter gone by, with standout performances in markets of Latin America, Nigeria, which is up by around almost 3 times. Also important to note that the company is sitting on a cash balance of 21,000 crore rupees, which enables the company to take decent capacity expansion and to meet this rising demand in the e-wheeler segment, EV segment. So a very strong set of numbers from Bajaj Auto.
Moving on, the RBI has released a draft to simplify India's foreign investment framework by proposing rationalized foreign exchange management for non-debt instrument rules. The draft aims to align regulations with the government's FDI policy, adopting a principle-based approach to accommodate evolving business models and update norms for overseas listing of Indian companies. The central bank has invited public comments on the draft till the 31st of August. Meanwhile, let's take a look at how Wall Street is performing this Tuesday. US markets opened firmly higher, rebounding after Monday's losses. The S&P 500 gained 0.7%, while the Dow Jones Industrial Average also rose 0.7%. The tech-heavy Nasdaq Composite, meanwhile, outperformed, advancing 1.1%, led by strong gains in semiconductor stocks, which lifted the broader market. Now, Tuesday's rally follows a week previous session when investors turned cautious amid escalating tensions involving the US and Iran. Meanwhile, oil prices remained volatile, swinging between gains and losses as traders tracked renewed diplomatic efforts aimed at easing the conflict. Investors, remember, are also keeping a close watch on crude prices, given their potential impact on inflation and global market sentiment. In fact, Iran's IRGC claims it has destroyed Amazon's central data hub in Bahrain using cruise missiles, calling American tech firms legitimate military targets. The group has also warned 18 US technology companies, including the likes of Google, Microsoft, and Cisco, saying that they could be targeted next. Now, this is not the first time that Iran has claimed to target US tech infrastructure. The IRGC has earlier claimed attacks on AWS facilities in the UAE. The latest development, however, comes amid a sharp escalation in the West Asia conflict, with Iran and the US continuing to exchange missile and airstrikes, while disruptions in the Strait of Hormuz continues to raise concerns over global energy supplies. In fact, we have Sumita with us for more on the developing situation. Sumita, over to you.
That's right. Iran's IRGC has claimed that it destroyed Amazon's central data hub in Bahrain using cruise missiles. In fact, this group has also warned at least 18 U.S. technology companies, reportedly that includes Google, Microsoft, and Cisco, stating that they could be targeted. Remember, this is not the first time that commercial facilities of U.S. tech companies have been targeted, because earlier on in April, AWS's facilities in UAE and Bahrain were targeted. And in fact, U.S. tech companies were back then also warned of these attacks. Iran, meanwhile, has been retaliating with attacks on US-linked targets across Bahrain, Kuwait, and Jordan. And remember, this happened after the US launched a 10th consecutive day of strikes on Iran's command centers, defense systems as well, which were hit. What's also happened, according to reports, is that regional mediators, including Qatar, Oman, and Egypt, they are pushing for a proposal for a short-term ceasefire, for a 10-day ceasefire. But will that be acceptable to Iran and the United States? That remains to be seen. There is also an opening of another front, because Yemen's Houthis, they have announced a naval blockade on Saudi Arabia from the Red Sea. They have threatened to cut off Saudi oil exports to the Bab al-Mandab Strait. And this, remember, is the opening of a new front in this regional energy conflict that is for sure likely to lead to rising energy prices and, of course, the rising freight costs for exporters as well. Meanwhile, on the Indian side, well, India's MEA summoned Russian chargé d'affaires Vladimir Ladanov. The MEA conveyed India's grave concerns and unequivocal condemnation of the attack on a commercial vessel, that is MV Golden Leo, on 19th July 2026. This vessel was attacked while departing the Odessa port of Ukraine, and this actually led to the loss of 4 Indian lives. And India once again has expressed its condemnation in a statement on these attacks on merchant ships, and it has called for stability. And of course, it's said that these attacks undermine the safety, security, and stability of international maritime commerce.
Well, with that, we'll slip into a short break, but Business at 9 will return after these messages. Keep staying tuned to ET Now. Welcome back. You're watching Business at 9 with me, Jude Sanat. As we have been reporting through the greater part of the day, it's been an action-packed day in the national capital, with protests aplenty, especially over that NEET paper leak controversy. And Congress leaders Rahul Gandhi, Priyanka Gandhi, and other top-ranking officials of the party have been detained by the Delhi police after they staged a dharna outside Prime Minister Modi's official residence at 7 Lok Kalyan Marg. MOS for the PMO, that's Jitendra Singh, met Rahul and the other Congress leaders and tried to placate the protesters, but the dharna took a dramatic turn after the Delhi police began the crackdown to vacate the high-security zone. Now, Sonia Gandhi has reached Mandir Marg police station, where Congress leaders have been taken and detained, especially after they were rounded up at that protest. Now, the political row over the NEET controversy has intensified, with Union Minister Jitendra Singh accusing the leader of the opposition, that's Rahul Gandhi, of changing his demands during the Congress's protest at Lok Kalyan Marg. Now, Singh claimed that the government had initially agreed to a discussion on NEET and other related issues in Parliament after Rahul assured him that the protest would end if such a debate was allowed. However, he also alleged that Rahul later added a fresh demand seeking the resignation of Union Education Minister Dharmendra Pradhan, prompting the centre to then accuse him of shifting goalposts and choosing confrontation over dialogue.
धरने के लिए बहुत ज़्यादा अनुकूल नहीं है, उससे बहुत ज़्यादा असुविधा हो रही है जनसाधारण को। तो इन नेताओं की वरिष्ठता को देखते हुए सरकार की ओर से ये फैसला हुआ कि मैं स्वयं और मेरे संग केंद्रीय गृह सचिव मौके पर जाकर के इन वरिष्ठ नेताओं से मिले और हम ये सोच करके गए थे हम बड़ी विनम्रता से अपनी बात रखेंगे, तर्क रखेंगे कि सरकार से अगर चर्चा कर ली जाए बैठ करके तो ज़्यादा बेहतर है। बहरहाल वहाँ पहुँचने पर हमें श्री राहुल गांधी जी ने ये आग्रह किया कि यदि सरकार संसद में चर्चा के लिए तैयार हो जाती है नीट और उसके साथ संबंधित शिक्षा संबंधित विषयों को लेकर के, तो वो तुरंत अपना धरना समाप्त कर देंगे। मैंने ये बात उनसे एक मर्तबा नहीं 2-3 बार पूछी। उसके उपरांत मेरे हमरा केंद्रीय गृह सचिव थे, उन्होंने भी पूछा कि विल यू इमीडिएटली एंड दिस धरना इफ यू गेट एश्योरेंस? बोले हाँ।
And so a deadlock continued on what was supposed to be day 2 of the monsoon session of Parliament, with opposition members raising slogans and disrupting House proceedings. Prakash gets us more details on what transpired in Parliament today.
Well, it's been a very stormy monsoon session so far. The second day of the monsoon session was washed out amid huge uproar by the opposition parties. They are continuously demanding a discussion on the NEET paper leak issue. Earlier in the day, leader of opposition Rahul Gandhi met with the Lok Sabha Speaker Mr. Om Birla, urging him to initiate a discussion on the NEET paper leak issue, which was not accepted. And therefore, opposition parties members were raising slogan inside the House, insisting the chair to initiate discussion on the NEET paper leak issue. Despite repeated appeal from the chair, opposition parties members were not ready to go back to their respective seats. That forced the chair to adjourn the House for the day, despite without conducting any significant work. Outside the Parliament, we've seen some significant developments as well as the leader of opposition, along with some other opposition members, marched towards the Prime Minister's residence. In fact, they staged protest outside the Prime Minister's residence, and they were not only demanding discussion on the NEET paper leak issue, they were also demanding Prime Minister's presence in the House. So that clearly shows that the opposition parties are trying to put pressure on the government. Meanwhile, the protest led by CJP is still continuing at Jantar Mantar. However, the Prime Minister, while addressing the India Parliament board meeting, has clearly stated that the government will leave no stone unturned to punish the perpetrators. In fact, a comprehensive and transparent system will be developed to ensure complete transparency in the examination system. So the Prime Minister has given a clear signal that perpetrators will not be spared. But meanwhile, opposition parties and the government have locked horn with each other. There is complete deadlock. There is no sign of reconciliation. Let's see how it pans out. At this point in time, the second day of the monsoon session, completely washed out amid huge uproar by the opposition parties.
Right, let's bring you up to speed with some geopolitical action next. After his talks with the Lebanese president, US President Donald Trump has spoken about the West Asia conflict. In fact, let's summarize what the president has said. Now, Trump has essentially maintained that the United States will in fact strike new sites in Iran. The president has said that Iran cannot possess a nuclear weapon, and it will not do so simply because America, he claims, has significantly undermined Iran's capabilities. Trump also maintained that the US will strike new sites in Iran because Iran, he said, is involved in nuclear weapons and is trying to revive a potential nuclear site. Trump also maintaining that any nuclear site that the Iranians consider reactivating, the US will in fact strike again. And if something should happen in the Red Sea, Trump saying the US will simply have to deal with it, and the world, of course, will have to deal with the fallout of that. The situation in Iran, Trump said, is also more complicated than Venezuela, drawing parallels between both countries. Trump also maintaining that while the US may strike the Iranian site in Jabal al-Faiz rather soon, therefore a strong warning coming in there from the US president. Let's listen in to what the US president had to say.
There are no signs that Iran is ready to stop fighting. So what is the plan? Is the plan to just keep bombing until they give up?
There are no signs. What, do you know something that I don't know?
Well, they continue to attack our allies and
You
kill
don't know
Americans.
what the dialogue is behind the scenes, that they want to meet desperately to try and end it because they're getting decimated. You don't get that when you listen to your fake station, but you don't know. You don't know anything.
So talks are
do you know
still
something that I
possible,
don't
likely?
know? Do you know something I don't know?
Well, tell us.
I will tell you, they want to desperately meet, and until they're ready to meet in a meaningful way, we have no interest in even.
Moving on, Adani Energy Solutions has reported a strong set of earnings for the first quarter of FY27, with PAT rising over 130% to come in at over 1,200 crore rupees when compared to the same quarter last year. Moreover, quarterly EBITDA also saw a 58% jump to cross 3,000 crore rupees for the first time ever, supported by stronger operating performances across the portfolio.
Adani Energy Solution has closed Q1 FY27 on a very strong note, underpinned by disciplined execution, operational excellence and prudent capital management across all our business vertical, and contribution from an energy solution platform. For the quarter, our total income reached all-time high of rupees 9,852 crore, which is up 40% from the corresponding quarter last year. This was driven by contribution from recently commissioned transmission projects, smart meter, and energy solution platform. Profit after tax during the quarter more than doubled to rupees 1,237 crore. EBITDA rose 58% year-on-year to a record rupees 3,178 crore. During the quarter, our capex stood at rupees 3,498 crore, which is more than 1.5 times from the year ago period.
Well, with that, it's a wrap on Business at 9 from all of us here at ET Now Studios in Mumbai. Thanks so much for watching. Market action will continue first thing tomorrow, but keep staying tuned for more programming from ET Now itself. But for the moment, it's goodbye and good night.